Next move in the Middle East could have a direct impact on what drivers pay. So for more on this, we're now joined by Chief Market Strategist and CEO of Market Rebellion, Mark Lopresti, and Research Fellow at the Thomas A. Roe Institute for Economic Policy Studies, Alan Mendenhall. Gentlemen, great to have you both on this morning. Mark, I'm going to start with you on this one. So can you maybe break down what opening the Strait of Hormuz does for gas prices here in America? And can drivers expect prices just to kind of continue to fall?
Yeah, well, good morning, Alex. It's always good to be with you. And the short version is opening up the strait has a pretty dramatic and pretty rapid impact on what consumers pay at the pump. We saw on news of this MOU even before it was signed, gas prices, West Texas Intermediate, my favorite brand of oil, coming down even below 74. We remember, for context, we were around 95 just 2 short weeks ago. Big difference. We saw the average price per gallon nationally drop below 4. But if this MOU doesn't stick and we see continued funny business out of Iran like we've already seen this morning, prices will go back up.
Nobody wants to hear that. And Alan, when it comes to kind of other things, explain how the opening of the strait has a direct impact on prices of goods, and then you're also looking at inflation here.
Yeah, no, that's a very good point, because, fuel prices affect everything up and down the supply chain. So the latest CPI numbers, the Consumer Price Index numbers, gave us a headline inflation of 4.2%. That's increased for 3 consecutive months. That's what consumers feel most directly, because we're talking about food and energy. That's kind of the bad news. But the good news is that when you look at core inflation, which excludes that food and energy, then you're looking at a number that's below 3%, which suggests to me that the high prices are all directly linked to energy, which are directly linked to the Strait of Hormuz. So when it is open, and now that it is open, and that hopefully it stays open, we'll see prices come back down, and that headline inflation number will come down. And by the way, this is a far, far cry from where we were under Biden, when we had that number at 9.1% and gas prices were over $5. So, just to put things in context, when we feel the pain, it could be worse.
Yeah. Oh my gosh. When you bring back 9% inflation, it's just it's all you have to have perspective with this entire situation here. But Mark, let's just continue talking about this, because let's talk about Iranian production is expected to recover more quickly than output elsewhere over there in the Gulf due to the lifting of that naval blockade in the MOU. But my question to you is now, what happens to oil prices if Iran's exports return faster than maybe expected?
Yeah, it's simple supply demand, Alex. Prices will come down. There's no doubt. And a lot of that very hotly contested $300 billion in the MOU, which is not a handout to the Iranian regime. It's not going to the government. It's private investment to rebuild the oil infrastructure that the world relies upon, paid for by the Gulf states, by the way, who rely perhaps even disproportionately on that oil supply chain in Iran than the United States does. So if all of those things happen, it adds supply to the overall supply-demand construct, and prices will come down. Here's the problem with that, with the Biden 9%. People's memories are short, and they only remember what they paid at the pump yesterday. That's the problem.
That is such a fantastic point. I feel like we've almost been harping about that on this program. People have such short-term memory, and that's such a good point you bring up, Mark. But let's talk about just kind of the market overall, Alan. So kind of liking this agreement between the U.S. and Iran so far with numbers, pretty much all gaining yesterday. Do you think this will continue into next week?
Yeah, I hope so. I always hesitate to forecast. I think we had a little bit of a drop after the Fed announced that it was going to hold interest rates steady, but it rebounded yesterday. Of course, markets are closed today for the holiday, but I think, we're looking fairly good going into next week. The economy's really strong. We've had great jobs reports. We've had great, corporate earnings reports. So I am very optimistic right now about where our economy is, especially now that we've reached this deal with Iran.
Yeah. All right, gentlemen. Mark Lopresti, Alan Mendenhall, loved having you both on this morning. Appreciate it.
Good to see you.